Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. I am recording this intraday. As I record this video, market should be open another, let's see, hour and a half. 1 hour and a half as I record this video. Hope you guys had a good week trading this week, navigating through a volatile environment that you've been in pretty much throughout this month. And let's go through these indices and the sectors, and let's see how we can make some sense of it. Let's start with the spider as we always do. Diamond, Qs, the Russell Semi, and the banks. Let's kind of follow up since the last week's market update video. Obviously, some of these levels we talked about on the last market update video. When was the last Friday? Last Friday was 24th. So I see. Okay, so that was 24th right there, and that was the, last Friday. And so since then, and I've given you these levels here, 280, 277, 275, and you can see that was a 280 level, and we lost that level. I mean, we were just, we closed right on that level on 280 last Friday towards the end of the day, and then Monday Friday, Monday, Tuesday, Wednesday, Thursday. Oh, because the Monday we didn't. So we had a 4-day trading. Okay, so that's Friday, Tuesday, Wednesday, Thursday, Friday. So that was a Tuesday, right? And then we came on Wednesday. You can see that we gapped down, and we initially saw that dip buying activity here, as you can see here. So we saw that long lower wick here, a little bit like a hammer type of candle there, and we saw doji though, and what that doji really did was we filled that gap. So you can see there was a gap, the down gap, that gap was filled. And so once again, we talked about it, when the gap gets filled, it's gonna act as instant either resistance or instant support. So we will have to be fair about that also for bears, that this down gap was filled, and then that acted as resistance, and then now we saw another gap down today. So let's do that. So gap is still open, so let's put that right there. So let's get rid of that. So we're actually retesting as of today our last level that we talked about on the last market update video last Friday, which is a 275 level, right? So I've given you the 275 level. So 275 level is actually coinciding with that island bottom gap right here. So you can see there was a gap down and there's a gap up. So that may turn this into an island. And it was interesting though what happened back in March, early March, because it came down to this level, which was never filled, and this was also island reversal gap. This was island bottom reversal gap. This gap was never filled. We gapped down, and right away we found support in that vicinity. So what I'm going to do is I'm going to actually put that number right there, 272. But I think this is going to be pretty strong support level. We are now trading slightly. You know what? I think I got to put that 100, 200 SMA. Currently, I think it's setting it. You know what I'm going to do? That's how I actually, when I tweeted out this week, the 200 SMA, that's how my setting was, which is 200 SMA setting at low. The reason behind that is because I want to kind of accommodate. You can see that 200 SMA kind of coming here, kind of was in that vicinity, came here, it was in that vicinity, and we're now in this vicinity there. So right now my 200 SMA setting is at low, to accommodate this and this and this here, which is coinciding obviously with that 275 level. So right now, this is a level we're looking at. We've been seeing a lot of gappy movements throughout this month. And so we have bulls or bears have yet put on another gap. Again, that gap is going to make things, again, all these down gaps are going to make things hectic for the bulls. For the bulls kind of jumpstart this thing, what they need to do is maybe find support here. I don't know if it could be sideways for a little bit, or it may even come down, fill the gap next week, early next week, either way, and then kind of and then maybe gap it up. And I think if we can see a gap up and maybe island bottom, then it's gonna go after this gap here. This was definitely I made it into purple because this definitely was island bottom or island top, right? Because we saw that gap up right here on the May 21st, and then we gapped down right at that level on May 23rd. So this became island top, and that's kind of really what made this this fall there. And also the other thing that I want to talk about is I think 280, and I talked about this on the last few market update videos, that 280 seems such a too obvious level, right? Everybody's looking at this level as a potential support. Everybody can see this level, and market knows it. And a lot of times what they're going to do is that they're going to go long at 280, and they're going to place their stop below at 280, and market just like to take that stop. Also at the same time, what's going on right now is this is what's going on, this right there. This is the left shoulder. Again, this is what the bear is going to argue. The head, the right shoulder, and then this is a neckline. And a lot of times if they're a little bit educated in technical analysis and some of the technical the basic of technical analysis, well, they're not going to be stupid and say, you know what, this is not going to go straight down from here. They're going to say, well, we need to see this getting up, retest this neckline, and then fall. That's what a lot of bears are going to argue. I think in certain instances, in certain situations, certain circumstances, that could be viable, that could be valid. But at this point, looking at more of an intermediate and primary term perspective, I'm looking at this more as a trap. So I think, you know, a lot of people are looking at head and shoulder formation and looking at, okay, that's the downside. And they might even do some sort of measuring type of thing like here. Okay, it's going to come down to 265. And that's a possible. Obviously, anything is possible at this point. And something that I talked about is we're currently, we're down from the peak. We're down about 6.3. And you guys remember my max drawdown is about 8%. About 8%. So I think my max down is about 270 is my max drawdown. I think the worst case scenario though, and this is something that I talked about like a month before, is the worst case scenario maybe retesting that, right? That would be the worst case scenario, is retesting. But I don't think, because I think these, again, these supports that we have, that's a pretty solid support. There's a pretty sizable support, or the gap, and these gap areas are going to provide pretty solid support. And this has been coming down pretty gappy. And again, this could be a breakaway gap down and a continuation gap with the island top, and we had another gap there, and there's another gap here. So are we getting into an exhaustion gap? We don't know. We don't know if it's going to be exhaustion gap until we see that exhaustion gap turning into a island bottom. If we see this island bottom kind of taking out this stop right here, then at that point we can conclude that potentially be an exhaustion gap down, and we possibly doing something here in higher or something like that before going higher. So that's kind of where I'm at right now. I'm thinking that this is more of a market coming down, because a lot of people who bought in anywhere in this vicinity, they're gonna play stop at the lows here, and then they, market likes coming that down. And again, something that I talked about here, and it's, a lot of people close out their positions here, close out with the loss. And then this thing goes higher, it goes near all-time high. You start chasing it up here, which I know a lot of people did. Now you're losing again. You see, this is kind of what I was talking about. I've been preaching this throughout this entire year. Now you're losing double, right? You lost your money by closing out your longs. You missed out entire move, right? And then you're buying it at the top. Now it's pulling back 6-7%. So now, this is kind of why you don't want to chase it. And I think this was a level that there's a lot of complacency. Isn't that funny how that works? When the market is going higher, it feels like it's never going to pull back. When the market is pulling back, it feels like it's never going to go back up. It's always like that. It always plays trick on you. So understanding more of a longer term perspective, that would really help. So I'm giving 275, 270. So this vicinity as a pretty solid support area. Again, I've been talking about 5 to 8%, in this vicinity here, and we're currently seeing about 6%. Let me actually throw a fib too, if that level kind of coinciding any level. So first Fibonacci level is this vicinity here at 270, and that's what I'm seeing. I don't see this thing coming any lower than that. And a lot of people are thinking, okay, well, we had a very, very big move, so we're going to have a very, very big decline. That's actually not true. Just because we always have a very, very big move doesn't mean it has to have very, very big down move. We may see a sideways. We may see some volatility. You know, we don't know exactly how the market is going to bounce or how it's going to reverse. All right, so I had to close my window. My office window is open and they're mowing the lawn outside. It just got loud. So, so these are the levels here. I know where the market likes to do that. Market likes to, there's certain level that everybody's looking at, certain level they think the market should bounce. And if that's unanimously, that is a prominent level, I think the 280 was, the market likes to kind of maybe give you a little head fake here and then pull back and take out more stops. And like a lot of times what's going to happen is, you know, people are going to get very, very exhausted. They're trying to buy the dip and this does not play out. They are hoping. And then they say, well, this kind of pullback I can take. And then it's going to just push little more and little more. And when majority of traders and investors are thinking, oh my God, I cannot take this anymore. And then it's going to give you another little more pressure. It's going to go down a little lower. And they're like, okay, I'm out. I'm done. I'm gone. Like, I'm done. I can't take this anymore. This thing is never going to go back up. That's when the market tends to bottom out. So, and we don't know what level that might be. So, obviously, we taken out 280. And we're retesting 200 SMA. 200 SMA to me is very prominent. Everybody understands 200 SMA. So I mean, sometimes things play out swiftly. Where hey, maybe this is we see that 200 SMA acting as support. Sometimes you know what I mean. It's gonna play around a little bit in that area. So let's look at 270, 275, 275, 270 level. We got gap area here, we got another gap area here. So I think those are levels going to be important support going into. And I think we're getting into pretty oversold level as far as the daily chart is concerned, more of a minor term. And this to me is a minor term, right? That's a minor term to me. And this is intermediate term. This is a minor term. And obviously the primary term is going all the way back to 2009. So let's see if we can hold this level, see if we can see a gap. But if we do see a gap up, that could potentially be that island bottom reversal. And we'll follow up next week and see how the market deals with these levels and some of these gap areas here. And obviously, I think, you know, this being, people are going to say that potentially this is a, you know, head and shoulder break lower, possibly confirmation. And a lot of people are going to look at if this thing does go up, a lot of people are going to look at this vicinity. So I think 285. So we'll deal with it when we get there and we'll follow up next week. Let's go to Diamond real quick. Diamond is, we feel that gap. Now we're retesting this level. So let's do that. And we got a couple gaps here. Diamond does look exhausted or exhaustion gap here a little bit. We got this gap. That gap is still open. And we got another gap. So we got this gap. We got this gap. We got this gap. We got this gap. And these are got little tiny gaps we're seeing here. And looks like potentially this is exhaustion gap. We don't know that yet. We still have this island bottom reversal, that green gap here. So I'm going to do this here, right? So now we're actually on the diamond. Looks potentially be completing maybe massive inverted, intermediate term inverted head and shoulders. We don't know that yet. I think this, again, that was a support, right? That's the support. Market knows it. A lot of people place their stop just below it. A lot of swing traders, a lot of shorter term traders, a lot of medium term traders, they're going to place their stop below it. And once we get below it, they're going to close out all of their longs with loss. And market knows that. And so, you know, people who missed that entire move, they're trying to go long here, didn't work out, and then they bounces at 254. Maybe they're trying to go long there, somewhere in that vicinity, and place their stop, very tight stop, and the market just likes to come down and take that stop. So that's, and on the diamond, we are below 200 SMA currently, but we are in that vicinity at 248, and that's the important gap. If this gap remains open, that will be more bullish case. It will be more bullish case, more of intermediate term when it does bounce. But if we do come and fill it, that would act as strong support. We already filled this gap though, right here. And we initially bounced here. That's kind of what we saw yesterday and Wednesday. but we continue to see another gap down here, continue pressuring the bulls and retesting this level. Let's look at Qs. So Qs, I given you these levels again. We came and filled that gap a few days ago, and we initially bounced a little bit, but we saw another gap down. So what I'm gonna do is I'm gonna do this. Make that again. Those gaps are going to make things hectic for the bulls here. This gap was pretty much filled with that, and then we got this gap right here. So let's extend that. So what I'm gonna do, I'm gonna actually bring this down. We're currently, you know what? Let's do this. We're currently right here. We got 200 SMA in that vicinity. Is now we're testing this here and here, potentially there, but you know, I want to give you 173, 169. Potentially that gap area. So we got that gap area too. So let's extend that. So let's do 173, 168 vicinity right here. So we got this gap down, another gap down here. And you can see, I don't really, the way it's been moving lower, I can see just from looking at these candles, the dips are getting bought. You know, traders and investors are not completely unloading their shares. They are accumulating, as you can see in these candles here, right? We're not seeing huge distribution days. We're seeing these gappy movements. A lot of times when you start to see these gappy movements, the market just start coming down, just taking out these stops, just, you know, very, very quickly. And a lot of times, once that process is done, market likes to kind of get back up here. Again, we don't know if it's going to be another V shape. We don't know if it's going to be maybe like something like this. We don't know it's going to be double bottom or triple. We don't know how it's going to do it. We'll need more evidence to do that. So we'll look at these levels. I think I have to say we're getting very, very close to making that higher low level. And I've been talking about this, that we went straight up here. And then we need a more steeper decline to cultivate intermediate term higher low before going higher, right? This is why, you know, it would have been better to not chase this move and start buying it at these levels, because if you start chasing it, you're again losing double. Close out down here, buy more, and you're now losing even more. Russell 2000, I think I mentioned this on the last several weeks, in fact, that I said, you know what, I think there's a chance that Russell 2000 coming down, making new low, taking out the stops, right? Because this is pretty symmetrical. Again, sometimes what it does is sometimes market does respect these levels and just, you know, go swiftly. But many times, you guys remember back in 2017, do you guys remember I was buying the dip ferociously throughout the summer? And then what did the market do? Market did this. I'll show you. And I'm not saying just because it happened then, you know, it's going to happen now, but I'm going to show you what happened right here. So it was pretty symmetrical rising wedge, or not wedge, but rising channel, right? And this is obviously that prominent, obvious support. And this was, and obviously, you know what this was? Yeah, this was that resistance, right? And I was buying. I did a journal call on this. You guys can go check it. You know, I do IWM journal. My calls on it. I was buying all throughout the summer, just throughout the entire 2017. And then I even bought this right there, and then we lost it. We finally lost it, right? And just the way it came down, you can see how it's pretty methodical, like up and down, up and down, up and down. Oh, go up. Oh, it's a little bit up and down. Oh, go up. Oh, a little bit up and down. And then out of nowhere, this thing just had that distribution week where it seems like this just massive panic. I remember when this happened on this day, I even made a video about it. I'll go find it. I'll put it right there so you can see it on your screen. I made a video about this, why I was bullish at this point. Because people are saying Russell 2000 just broke below the massive, you don't know, just massive bottom or something. I forgot what people are saying. And they're saying, oh, Russell 2000 is going to take all the markets down. We're going to see a huge crash. Russell 2000 has come back down to like, I don't know, back down to like 100, 120, 120. That's what they're saying. Everybody's saying. And what happened once you see a breakdown? Because it started coming straight down. I mean, this definitely looked like some distribution weeks here. And then you can see how right here that looked like it was breaking below it. Everybody got stopped out. And then look at how this thing just went straight up, right? And that's what it did. Boom, boom, boom. And then I close out some positions. I added more, and I start closing all of my positions. You guys remember that? But it took, man, 5 some months for me to just keep buying that dip until this thing played. But that was a proverbial bottom. That right there, that was it. Why? Everybody's in panic. They can't take this anymore. They can't live with themselves anymore. This is too painful. Why? Because often they start chasing it. They probably looked at this as, aha, that's a breakout right there. Consolidation, they went long right there. And then, they taken out people from here, placed their stuff below it, took out those people. But there's some people a little bit more stronger. They say, you know what, I'm going to place my stuff here because that's important support. Took out that stop to completely wiped out almost a lot of retail traders. And the market just basically went without them. That's how the last times market works. So now, it's kind of similar, but I'm not sure exactly, it's not exactly similar, but that, look at it. And I talked about this, didn't I? You guys remember that? If you've been following my market update videos, I said, I won't be surprised to see going up here and pulling back down, getting below it, getting below the 249, 149.50, taking out people's stops, and then finally go. So those are the levels there here. Let me get rid of that. So let's look at 146.20. So I think we're getting pretty close. I mean, if I just go to daily, let me show you this oscillator. Yeah. Again, oscillators, you always want to look at them as a potential reference point, not so much like buying or selling. So you can see right there. It's like there, we bounce here, we bounce there, we bounce here, and we bounce there. So some of these, we're getting that level pretty over. So doesn't mean it cannot go lower. It just means if we do see a bounce, this is a level likely this could thrust to the next level. Again, a lot of people are very, very nervous. And this is kind of what I'm saying. You're just picking up technical analysis. You see this, you see this 11 hold, breaking below it. Everybody run for the exit. Everybody run for the exit. I'm here to tell you, this is actually pretty good level to accumulate. You know what I mean? But you have to read the situation. That's not always the case. Anyway, let's go to semis here. Semiconductor, I gave you 99.96. We're holding that level. I mean, semi already came down quite a bit. We already retraced about 50% with a great move, coming down 50%. We need this is a very strong support, 99, 96, 89 here. And I think we're getting very close to bottoming out here. Let's go to financials and let you guys go. Financials came a little lower than I've anticipated, actually. Let's get rid of that, rid of this. So we had that neckline. We initially bounced a little bit, and then we're getting back below it. But good news is, I want you to really count these higher lows and higher highs, looking at more of an intermediate term here, okay, ignoring everything else. Because I have to say, though, we're still in the vicinity of a lower high, so you can see that. So that's kind of an intermediate primary term perspective, so it's a little bit more vulnerable look, but just looking at more of a minor to intermediate term, you can see that we are cultivating higher highs, and this is low, higher low. We are in the vicinity of higher low. So we want to stay around here, 25.90 maybe. Let's do that. 25.60, 25.32. You know what? What we want to see is not get below and make equal lows. We want to see this thing holding above it and then maybe cultivating on another higher low, and then it gets up to 28.97, create equal highs or higher high and fall back and then continue to trend that way. But I think we're going to do something like that on the banks as well, because I like banks looking at things from a more of a long-term perspective. As I close this video, market should be open another hour and 10 minutes. As I close this video, market should be open hour and 10 minutes. So you can see that it's hanging around in that vicinity. Let's see if you can see a gap up. If we see a gap up, maybe Monday or Tuesday or something like that, then that turn into an island reversal, and you know, that could potentially, this thing could get back up to kind of challenge that gap area. Again, if we see anything, I'll tweet it out at 2K Kim. You can follow me there. Otherwise, have a wonderful weekend, and good luck trading next week.